Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 2nd day of March 2015, and this is the daily report for gold and silver. Lower pricing in both gold and silver today. Platinum and palladium trading higher. I believe that is in conjunction with record highs in the NASDAQ as well as new record highs in the Dow Jones Industrial and the Standard & Poor's 500. Gold just off of the low being 1204.40, currently trading 1205.91. It has had a high, and this was last night. Very, very disappointing lack of follow through because the high was 1222.90 on the day, but it has come down and come down fairly substantially, just above our current stop level. The key is on this particular market as we look at it is the fact that on the last 3 occasions, this being a daily chart here, you can take a look at Monday's activity today, which is a red candle. We are trading lower, of course, but we've got Friday as well as Thursday having higher pricing, hitting this high, but not being able to take this high out. And what bothers me right now is it's very reminiscent of this activity we had here as the market kicked up off of this former level of support at 1221, traded up to this high at about 1231 or so, but then just back down and then back down all the way to the next level of support, meaning roughly the 91 area. So although we're not stopped out, I'm not real comfortable with this trade. Obviously, we're in at 11. We are not stopped out, but at the same time, this lack of A, follow through, and B, the fact that 3 days in a row we've tried to take out these price highs and on none of those occasions could close near that area is a little bit concerning. We'll talk about gold in just a second, but let's take a look at silver pricing. And as you can see, I've put up our daily chart of silver. It is also trading on the lows, 1637. That's our current print. Puts it off about 25 cents on the day. The low, 1630, so it's just off of this low. The high, 1672. So traders, of course, the big story today really is the equities markets as they run away to new historical record highs in the market. This is the Standard & Poor's 500, the E-mini, 2114.75. Former high being roughly at the 2010 area. That's right here. And we've exceeded that on today's move. Of course, NASDAQ for the third time in history closes over 5,000. So traders, as far as some of the other markets, a dollar is trading higher today. This our weekly chart, the continuous contract of the dollar index, a basket against the US dollar. You can see on this weekly chart, it is only Monday, but it is green. We do have a higher move right now trading at 95.52, just above the most recent highs of last week. At the same time, we have oil attempting to find some sort of support. You can see this is, again, on our weekly chart, so it only represents 1 day of trading being on Monday. Relatively quiet day. You can see these lows that it made. It's had a pretty good range. In fact, let's go ahead and pull up our daily on this oil chart so we can get a better idea of what we're looking at. We'll go ahead and reload it. And you can see that it is absolutely a consolidating day. It is trading below $50 per barrel, but above 49 at this particular time. So traders, as we go into the close of the morning session, just prior to our break before beginning to trade overseas, we are seeing the market recoup a little bit, currently trading roughly at 1206 and change, up off of those lows. But when we look at this market, as I said, this lack of follow through has definitely shaved any kind of optimism that I had. We had a nice rally to the upside, but we've had a tremendous roadblock of sorts in terms of pricing right up here at about 21. It seems as though the market has been unable to take that out. We can see other areas in which the market reacted without any issues whatsoever, breaking above that. But that, of course, was on a rally that was a continuation, really, off the rally from 1130 up to 1235, then back down to these lows here at about 1160. And then it had no trouble really from 1160 to about 1300, just over 1300, barreling through. When we look at the candlestick types that we had, we almost had the opposite activity that we're seeing here. And what I mean by that is, when you get these doji stars, you get a small-bodied green candles, and then the market seemed to go down. Here also, you had these smaller body green candles, and the market would correct. Now, if we look at this rise up, what I meant by the opposite is you get these strong green candles moving the market up, and then small corrective action. These red candles come in. Again, strong green candles, meaning really, really dynamic up days, followed by small days of retracement. Again, dramatic rise, small retracement, dramatic rise. We get our first indication we're at our top, this being our doji here. Green candle, no indication. And then you get what is basically called a dark cloud cover in terms of the candlestick pattern up here. So we've had a very, very tricky market. There's absolutely no doubt about that. Whether or not this stop will hold is something that we'll see really over today and tomorrow. I don't think it will take that much longer. It's either going to pop back up over it. We're so close to these stops that it won't take too much to knock it out. But my sense right now is the fact that we're getting these rises, but these rises are not all that dramatic when you look at the open to the close. And then more importantly, the fact that we've not been able to take out these most recent highs at 1221 is absolutely a concern to me on the long side. My sense is that if it cannot hold this, and if it breaks through that, we go back to our secondary assumption of the market and move right back into a bear scenario. And in that case, we will have to take, obviously, another strategy and look to short the market. Let's see what happens over the next couple of days. We have geopolitical hotspots, certainly, but most importantly, when we look at this marketplace itself, we've got a stock market going to record territory and then breaking those records and moving to higher highs. And when you have that type of scenario, of course, it's going to be difficult to see other markets move when really that's where a lot of investors are putting a majority of their investment equity. So traders, as far as silver goes, we've identified a couple of different areas. 1610, really, that's the area that we need to see silver hold. That would be roughly right here. It corresponds, of course, to these recent lows that we saw last week. Those correspond, of course, to those double doji stars that broke below 1198, and went to, I believe, 1191 on an intraday basis. That's the area we need to hold in silver. We talked about the area we need to hold in gold. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.